Good afternoon, everyone. Will quarter two lead to lower interest rates? I believe so, and let me explain why. So there's 3 data points we should all be watching on a monthly basis. First and foremost, and most importantly, is the CPI. Secondly is unemployment, and then the third is the Fed meeting. Well, the CPI, which is the biggest driving factor of interest rates over the past 12 months, is going to be coming down. Let me explain why. We know the CPI has been coming down month over month, but it hasn't been coming down enough. The CPI target's around 2%. Right now, we're well above that, but we know we'll start coming down quickly. And the reason why we're gonna start coming down quickly is that shelter, which is 33% of the CPI index, will finally start to catch up in quarter two. Let me explain. Shelter, which is home prices and rent, will start to come down. How do I know this? Well, the CPI uses the Case-Shiller price index. The Case-Shiller price index currently shows about a 5% appreciation in home prices. But if you look at reports like Zillow and the NAR, we know that home appreciation is actually down year over year. Case-Shiller is a slightly lagging indicator. We know that Case-Shiller will catch up, and it will catch up probably around April, and then finally that will show negative year over year growth. In addition, rent is such a massive indicator, and we can see that rent prices continue to decelerate month over month. But when will this catch up? According to CoreLogic, it takes about 12 months for rent to finally catch up. As of right now, CoreLogic has rent prices also up 5.7% year over year, but down nearly 14% from its peak. Well, that peak was in April. That's the most pivotal month for us. In April, when that peak is finally replaced with a lower rent number, then we know rent will come down. This will start bringing down the CPI much quicker and much stronger and more aggressively than what we've seen over the course of the past 9 months. So with the CPI, we also like to look at unemployment. Unemployment is the second factor that the Fed's continuing to watch on a month over month basis. Well, we know unemployment is going to start increasing here in the near future. How do we know this? Well, when we look at WARN notices, which is basically a 60 to 90 day leading indicator of jobless claims, that is increasing much more rapidly than jobless claims. So if the WARN notices, which basically is a signal for mass layoffs, is increasing, we know that unemployment's going to start increasing here in quarter two as well. So when you look at these 2 factors, this leads to the third factor, which is the Fed. The Fed needs to see these 2. They need to see CPI and they need to see unemployment increasing or jobless claims increasing so that they know that 1, CPI, the economy is kind of healing itself, that inflation's coming down, and that 2, when unemployment's going up, that the economy is struggling, that the economy is kind of breaking. They need to see these numbers so that they can start to lower the federal funds rate. When they do this, this will in fact lower the US 10-year, and this will in fact lower mortgage interest rates. So we expect this to happen here in quarter two. Again, we don't know if it's going to be April, May, or June, but we know it's coming here in quarter two. Expect lower interest rates, or we can hopefully expect lower interest rates here in the near future. Please reach out to a Secure Choice Lending team member today to learn more. We are an education-based lender, and we would love to help you out. Thanks. Bye.